Hey, what's going on, everybody? Happy Monday. I wanted to talk about a new ETF. It actually came out last week. It's called SIXY from Evolve ETFs, and it is their latest in their lineup of UltraYield ETFs. So they've got Biggie, they've got Canny, and now they've got SIXY. And what SIXY is, kind of like the name, it's focusing on the six big Canadian banks, okay? So we'll just read a little bit from the press release. Basically, guys, they started trading and they are going to be offering investors exposure to Canada's big six banks. So you've got RBC, TD Bank, BMO, Scotiabank, CIBC, and National Bank of Canada. Of course, they'll be using their covered call strategy, and they are going to be paying cash dividends twice per month, similar to their other ETFs in the Ultra Yield lineup. And so what it says here is they're trying to replicate up to 1.33 times the performance of the Selective Equal Weight Canada Banks Index. So that's the index that they're going to be trying to follow with this ETF. Of course, they're going to use their covered call option writing program and 33% leverage. Now, let's jump into the ETF page and see what else we can find out. They've got a NAV of 26.22. Again, guys, it's only been trading for about a week, but like the press release says, index based with a covered call strategy and 33% leverage. And it is concentrated, so there's only 6 holdings in there. But for an ETF that's only been out for a week, they've already got 10 million AUM. Those twice a month dividends, they definitely are nice as an income investor, and they've got their first distribution announced at 21 cents. And just so you guys can see here, I did some quick math based off the current NAV of 26.22 with that 21-cent dividend, and that came out to a yield of just over 19%. Again, that's just based off of this current dividend. We'll have to see how they sustain them, if they can increase them. This is a new ETF, so we don't really know. But it says here they're going to be writing covered calls on 50%, up to 50% of the portfolio, and they're going to have that 33% leverage, okay? No currency hedging, and they'll rebalance it semi-annually. Again, they're paying twice a month with a 0.60% management fee. All right. So it doesn't look too bad so far. We'll look at their holdings here. So at the top, they've got TD Bank, and then they do have BMO slightly less at 15, just over 15%. But as you guys can see here, everything is pretty equal weighted within a percentage point or two. Now, there is another ETF that comes to mind that I kind of want to compare this to, but it's also very different because with SIXY, they're using 33% leverage and they're quite concentrated with only 6 holdings. But the ETF I'm thinking of, guys, and maybe you're thinking of it too, is HMAX, because you see here that HMAX also is writing covered calls on 50% of the portfolio. And they are a Canadian financials, right? So they're not quite as concentrated. They've got 10 holdings. They're not equal weighted either, but they're still a fairly concentrated Canadian financials. Now, when HMAX first came out, I believe that the yield was like 15 or 16%. I remember at the time it was one of the higher yielding ETFs. That yield has since dropped down to just about 12.5%. The other thing with HMAX is, the distributions have been a bit rocky. We'll go back a few pages. They were up at 18, down into the 17s, from 17 down in the 16, back into 17, down to 16. And then just recently, they've been staying in that 16 and a half range. And again, guys, that's with 50% portfolio coverage. However, another thing to consider is the Canadian financials have been really taking off this year. So HMAX is up over 10% year to date. And then the last year and 2 years up 18%. But when they first started trading, they were up at like 1650 almost. And then it was a rocky year, 23 and 24. Even 24 was a bit rocky, but they started coming back up, right? So SIXY might have came out at a good time. We only have about a week worth of NAV to look at, but they're up 4% in the past week. And again, they do have that 33% leverage to those banks. So if you were a big believer in Canadian financials and you like those blue chip banks, this could be a good one to consider. Again, guys, you've got all the big Canadian banks here. These are huge names in Canada, blue chip stocks, great dividends as well. So you're probably getting some eligible Canadian dividends if you live in Canada. You're looking at some tax implications, right? Not financial advice, as always. Personally, for me, this is too concentrated. I'll stick with something like HDIV, which gives me a lot of Canadian financials exposure, but also it's a little bit more broad based, right? So, SIXY guys, you're getting concentration, 33% leverage, and a high yield distribution twice a month. Again, if you want some sector exposure to Canadian financials, could be a good one worth looking at. This is SIXY from Evolve ETFs. It's the newest one in their UltraYield lineup. Anyways, guys, leave me a like, leave me a comment if you want to, and I will catch you guys on the next video.